All right, so let's go ahead and get started again. It's Monday, it's the 10th of July, 2023. Had a beautiful weekend. I'm happy to be back, already making some money today and already trimming some positions. I want to go over what I have taken so far and just kind of talk through those. I'm going to use TradingView for a second. Before we get started, my number one go-to on TradingView, and if you guys have the indicators, you get both, right? So you, especially on that promotion, you guys got not only did you get Thinkorswim, but you also got TradingView, which is pretty neat, if you ask me, because I never offered that when I was running my own business. So that's a pretty cool deal, guys. But if you didn't know, this is a 3 minute chart, all right? And I don't typically trade on a 3 minute. However, when the market's pulling back and we're coming close to support areas or demand zones and things like that, I really like to go over to the 3 minute. Notice that the 3 minute green arrow here, I hate to say buy signal. Everybody refers to these as buy and sell signals. They're just indicators, right? And they're popping off saying, hey, we have formations forming here and so forth. So what I'm looking at is that the way that I teach this is that we go long off of this 3 minute. And what's really cool is on a 3 minute chart, your risk is defined. It's a lot smaller than it would be on like a 5 or a 10 or a 30 minute chart. The smaller we go down into time frame, the tighter the risk is. So remember, as a reminder, if you're checking out the TradingView, what I like to do is just put a stop underneath the arrow. Okay. And every time you get a new green arrow, what you do is you raise that up to here. All right. And what you want to do is try to stay in the trade as long as they can stay above the cloud. Now, notice it looks like Dave, if you can hear me, it looks like to me that Dave probably ended up going short around some edges or something. At least from what I see, we came right up into this little pocket of supply here. You can see we have this edge. We're getting very close to it. Price then pulled back. Now, notice that we're coming back to another previous edge, and what was resistance now is supposed to be support. Um, if I were to take some Fibonacci and just go from this pivot right here into this pivot up here, I want to know where the 23 and 38 is. I love this because SPX, ES, whatever, as long as we're staying above the 38, things look okay. We start to drop below there, I think we could continue to the downside, potentially to 33 and 31. And then I expect it to be choppy there and kind of play this out for another hour, hour and a half. And then maybe into the close of the market, we might get something fascinating. Okay. The play to me has already happened, right? And we talk about the PMZ. So this morning on the ES and the NASDAQ, we had two different blueprints. And remember, I like the bigger time frame, but what I do is I bring you in here on the open and I drill it down into a 5 minute chart. We use what's called liquidity chop zones, and then we also use the PMZ. And then any edge or any line that's on my chart, anything to the upside is going to be where we trim if we're long. It's going to be resistance until it's not. And then if we're short, we're looking for prices to push down into the lines that are on my chart. And we expect them to be support until they're not. And so I just want to make sure that we go over this because I know we have a lot of new traders, every week, and we want to make sure that everyone's really taken care of. The first thing I'm going to tell you is go to my YouTube channel. Okay, I'm going to keep reminding you guys of this. All right, if you go onto the YouTube channel and you check out, let's go over here into channel content. All right, and I'm going to pull this down just really quick. All right, so here's our channel content, right? And if I go over here and I go to playlist, you're going to see, all right here, that we have education training videos, all right? I want to remind you guys, all right? I hear so many kudos and you guys loving what Melissa presents to you and what she's teaching. But I'm here to tell you right now, all she did was come in here, she listened to me, and she binge watched the videos. And that's all we really ask you to do. And a lot of these videos that I've done, when you come over here and you click and you go into the videos themselves, most of these videos, folks, most of them were done anywhere from like a 3 to 5 minute, which is pretty insane. So it's really quick to get through. Now, if you're super bored and you just want to watch me on TV, you could do that too. And you can watch some of our live events and so forth and just listen, right? Because I'm always teaching. I absolutely love to teach. It's really, really important that you understand that. I feel like every time I get on here, it's like a webinar. I mean, seriously. Like I've seen a lot of webinars, I've seen a lot of talk, and one thing that I don't like to do is just talk. I like to teach, and that's what you're getting when you're listening to me. Okay? So, what I want to do is make you focus on what's available to you. It's all right here. Everything. Everything that gets traders started to learn about supply and demand and some of my, other techniques that I like to use, like using Fibonacci's. Okay? Now, over here, this morning, it's hard for me to think that it's choppy. Well, it is choppy, all right, but it's hard for me to think that you can't make some money out of this. The idea is to be mechanical, go long above the PMZ. You can see that it got into the line in the sand, it hit the liquidity chop, and a matter of fact, guys, that is 10 points plus to the upside, just following that procedure. Now, this is really important. I want to zoom in here because we had a question sort of like this last week. See this yellow line? This is automated. This is a trendy edge. This is support until proven otherwise. If I were to put a stop right underneath the PMZ here, would that make sense? That's my first question to you. Anybody that's listening right now, would you guys please give me an answer? Would you put your stop right underneath the PMZ here? You would not. Under the edge is better. Okay, so that's going to increase. Now, why would we do that? Some of you may be asking, well, why the hell would you do that, John? Because this is support until proven otherwise. And there is nothing worse to see two levels so close to each other, right? And if I'm not paying attention and I put my stop here, what's going to happen? We're going to find support in there and then boom, price goes right back to the upside, okay? Now, notice in here, what are some other things that can kind of keep us on the right side of the trade? Well, we have the cloud. As long as price is staying above the cloud, we're looking for it to continue. And then I teach you about the 23 and the 38%. Let's go ahead and measure the move right here. And you can see once we broke down below the 38.2%, and let me go ahead and zoom in for you. Once we broke down below the 38.2, it's all game over for me, my methodology. As long as price can hold above the 38.2 and the 23.6, I want you to remain and think this is bullish, but it didn't do that, okay? It did not do that. Matter of fact, it broke all the way back down almost to the trendy edge, then it starts going bid again, okay? All right, so what if you try to go short this morning? Well, for me, you would have to try and go short underneath the edge, and as you can see, we don't necessarily make it down to 44.22, all right? So we don't make it there, but if you try to go short this morning, as soon as we broke underneath, you're going to get chopped up. See, you're going to get chopped up. So if you didn't understand and you don't know, now you do know. There's a level right there. It is support until proven otherwise. Your risk to reward sucks. Okay? You see what I'm saying? Your risk to reward sucks. All right, so not great there. Now, what can you do at this point? What can you do to avoid chop? I like to teach if this, then that. And somebody had mentioned before, and I said, hey, listen, as long as we are staying above this level, and as long as we're not taking out the high, you can expect the market to chop. Okay? This is our range today until one or the other happens. Okay? And what's going to happen, I don't know if you know this, but I want to take you to a whiteboard. Remember, this is what I taught in the webinar, and I want to keep teaching this over and over and over just so that you guys really instill this into your trading. Our job is to be patient. Our job is to identify supply zones and demand zones, okay? The edges identify these zones on different time frames, all right? So instead of like creating the boxes, however, I do teach you how to do that. I could just look at my edges and understand where I am on the charts, okay? The idea is to be patient and wait for trades to come to you. And then you execute out of these zones. You can use the TTM Squeeze Pro to help you by looking at the histogram. You can use your allocation and understand what you're willing to risk, and then you can execute the trade. See? If I know that today I'm only going to risk 2 points, and let's say that this box is wide by 10 points, how do I do that? Well, I have to be conservative. I have to be patient, and there are a couple tools that I can use. What is happening, folks, is that, see, we gapped up and hit levels this morning, and then what happens is that the majority of traders will not execute when I believe the money is a lot easier to make, honestly. What happens is that the majority of traders actually want to trade in the middle. In the middle is very difficult, in my opinion. Okay? Don't diddle in the middle. It's a chop zone. But one thing you can do to make you a little bit more patient is to find things to do throughout your day, like study, watch some of the YouTube videos that I'm teaching on, ask me questions, locate the high, locate the level that we've already pointed out. And let's just do that in blue. So let's say right here and right here. And as long as price is not moving over or under, just don't do anything. Start scanning, start practicing, start looking for your formations. Look at your favorite names and start charting things, right? Listen, you guys, if you're on Twitter, make sure you follow me. If you have questions, if you're like, hey, John, I did this chart, all right, instead of emailing me, okay, I'm just saying, instead of emailing me, which most of you are not doing, I've asked a couple of you to do it, and I was going to take my time to grade some of your stuff, but I don't see any of that. So if you're on Twitter, all right, just reply to one of my posts and say, hey, John, here's a chart I did. What do you think about it? And I will give you feedback from there. Okay? So guys, if you don't know how to copy and paste, you can go to YouTube and figure out how to take your chart and then send it to my post, and then I'll look at it and I'll check it out and be like, hey, that doesn't look good. Or hey, you're doing a great job. This is what I would be looking for, okay? So please just do that for me if you're having a hard time. All right? All right, so the next thing, all right, is that a lot of people like to trade in the middle. So this is what I'm going to tell you. Why not just trade the levels? Okay? So notice here that we have a couple levels on ES, okay? You're like, okay, John, the level's there, but it didn't quite hit. Hey, John, there's a level there. I did go short there, and that made me some money. But what about this level? One of my favorite things to do, and let's see if you guys are catching on. What do I like to do? When we flush a level, what is an approach that we can do? What can we do in this area, guys? What can we do to try and take a trade down here? Reclaim, boom. There's the first one. Soon as it reclaims, put your trade in with your stop and then go. What are your targets? Your targets are the PMZ. The targets are the trendy edge. The targets are the line in the sand. Notice this would have worked out very, very well using that strategy. The next thing that you could do is come down here and look at the TTM Squeeze Pro. What do we look for, folks? On this pullback, even though there's no level there, okay? Notice there is no level here on my chart. What could you be looking at to help you out right there? In this situation, what could we look at? That's right, the yellow ascending. The histogram. Notice down here that our histogram is red. But notice we start to go yellow, folks. Take the trade, right? You know what your risk is. You know what you want. Boom, execute that trade, okay? What about up here? We're hitting this level, 44.40. Hey, it's a level that's on my chart. You want to go short? What's your stop? Same thing as a reclaim. Let's say that we have let me go to a whiteboard. Let's say that we have a level up here, all right? And I'm saying, hey, I'm thinking about shorting, or even, Super Dave, right? You say, hey, this is an area, if you want to be aggressive, I'm thinking about shorting here. Another way to do that, okay, aggressive would be as soon as price hits this top line, we go short because we know what our stops are and we know how much we could lose. And this could happen. But the other end of that, this could happen. Boom. What if that happens? You haven't taken a trade. What are we waiting for? You're waiting for this to happen. Okay, it has to break back through. Just like over here, if I'm waiting to go long, okay, and it goes straight through, reclaim. Boom, reclaim, Entries go in, stops go in. I'm right into the upside. You could draw Fibonacci's from here to here and start exiting around those Fibonacci's, or you may have some trendy levels on your chart that you could just use those. Okay? Anybody have any questions just about that particular strategy? It's really mechanical, folks. Really, really mechanical. Matter of fact, I mean, you could see here the NASDAQ paid to the upside, the ES paid to the upside as well. Okay? Right here. 10 points, about 500 bucks, folks. Just in the ES futures. Okay? So we're being super patient today. All right, I'm being super patient, and it's really helping out. The next trade that I took was HD. And HD, this is what the plan looks like. Now, I said that I would add up to X allocation. Now, that's a great opportunity if the market's pulling back for me. All right. But sometimes what will happen is as I scale into a trade, it actually keeps going up. And then I'm faced with the, do I want to get out here or do I want to trim? Do I want to be a good steward of my money? All right. And I've always said, you know, I'm at the point in my life, folks, where you got to be humble. I think it's really bad to be egotistical, and I really don't care if you make millions or if you make $500. What I do know is the market can take your money from you as soon as you make it. And I don't care if you made 200 yesterday, 200,000, because you can lose 300,000 today and you still lost $100,000. The trader that's a good steward of their money and doing right things by hitting base hits, not looking for home runs, and who can collect those RBIs is constantly trying to compound their money. And when they get the nerve and they feel better and they feel confident, they'll start to add on some size. Okay? That's what I love about trading. I want to see you get stronger. All right? Leave the ego at the door. All right? It's about percentage gains. As I've told you before, if I make 30% on a trade and I put 500 bucks in it, cool. It's the same thing if I put 10 grand into it. It's 30%, folks. Okay? So, let me see if you guys can guess this. Now, I was on the screen. I wasn't talking. Can somebody tell me when did I add my HD to this trade? Does anybody know? Or do you think, like, use some of the things that I teach? What do you think I did? Why do you think I added 2HD when I did it? Because it was perfect. As soon as we added, boom, went right back up. What did I do? Does anybody in here have an idea? So what I did was HD started to pull back. All I simply did, folks, is I came up here and measured HD candle, just like that. It had pulled back. Guess where it pulled back to? The 38.2, folks. The 38.2. That's all I did. Okay? Boom. You guys see that? Everybody understand, because you might be confused. There's the candle. It was pulling back. Go to a 5-minute. Where did it pull back to? Everybody see that? Does anybody not understand this? I just want to make sure. If anyone does not understand, please raise your hand, say something right now. Okay? That's where I added HD. Yeah, I don't. So JT, what I'll tell you is, JT says, totally understand. I haven't gotten to the point where I trust the fib pullback. What is there to trust? Like, how many times do you have to see it work in order for you to trust something? It's the market. To be honest with you, as soon as you trust it, it doesn't matter because the next day, man, is going to be taken away from you. That is called Murphy's Law, folks. I've shown it way too many times for you to question whether or not it will or when. I can't tell you if it's going to work. What I can tell you is that when I took the trade, I knew what my plan was. I send out an alert. Boom. I get into HD. I say, hey, folks, I'm willing to add up to X amount of money. Okay. It gets down to a level. Okay. I'm adding in. I didn't quite get to my money, but I am sticking to my plan, and that's all that matters. Before I even started the trade, I knew exactly how much money I wanted to put in. I knew exactly where I could add Fibonacci's, demand zones, inside and out formations, you name it, at another trendy level, at the cloud. What does it matter? That is my plan. The more we sit and we watch things, we start to feel more comfortable and consistent. At some point, though, folks, you are going to learn that it doesn't matter how many times something works for you, it could literally stop working tomorrow. And that is the problem with a lot of trading. Is just because it's not working for you, people go to another system. Do you see what I'm saying? It's the same logic that I taught you about surfing. And why not take it to someone that actually surfs? See, I live on the water. We go surfing. I understand surfing. I understand the market. And see, what actually happens is that the surfer, right, who's waiting for the wave, the impatient, the novice, the person who just started, who's been watching Surfer Magazine, they want to be a surfer, they paddle out to the ocean. And what they do is they look across and they see these bigger waves coming and they paddle over to those waves. And by the time they paddle over, the spot that they were just in gets the best swell and the best set ever. And then they're like, I can't believe I just paddled all the way over here and now the big waves are over there. So what do? They paddle back to the place that they were before. They said, I will not do that again. And by the time they get over there, the surf is down again. And so what you end up doing is you end up chasing something and not being patient, right? Think about that. We are designed to be impatient, aren't we? Don't you guys think? I think so. Very difficult to be patient, right? But it not only in the market. So people say, "What have you learned in the market that you can pick something out in life? Like how has it changed your personal life?" It has changed mine dramatically. I realize that FOMOing into things and not being patient doesn't pay off. When you go out to the beach and you're set and you're ready to go, and you go, man, I've been watching that spot for 30 minutes. That is the best place for me to paddle out and catch waves. That is my plan. See, I could paddle a half a mile east and something bad could happen. It wasn't part of my plan, right? Anything could happen. A riptide, a shark, who knows, man? Anything can happen. And then you're going to sit back and go, why didn't I follow my plan? At least if I lose, guys, I can go back and go, I was disciplined and I was consistent. And that's what matters. Don't change up what you're doing. Continue to get stronger at what you're doing and be the best at what you're doing. Okay? So HD started at the 38.2, but if you look, it also happened to be around the trendy edge. It also happened to be at the cloud. There were so many things that were confluent on that particular trade, and it ended up pushing almost up to 60% now. Okay, that's pretty cool. You gotta love it. All right, gotta love it. ES took a trade. I only took one trade today. I'm balling, man. Took one trade today. Made money on it. HD took trades on it. Made money. BAC down 6%, but I have a plan, right? I have a plan. I'm willing to add. All right. I'm willing to add. All right. And what did I say? I said that by the end of today, that BAC needs to close above here. Wait to see if we can close above later today. So towards the end of the day, folks, I want to see a BAC. Now, somebody tell me why this plan was important. Somebody regurgitate what I just said. Why is this plan important? Why is this plan important to me? It may not be important to you right now, but what does it allow me to do? And what did it prevent me from doing? Limit my risk on total allocation, but I also, it removes emotion big time. I already know how much I want to put into the trade. I know exactly what I want to do. Imagine coming in here and not having a plan. Like it's disgusting. It really is. It reminds me, it gives me PTSD of when I first started trading. It's horrible. If you don't have a plan, you're not doing it right. Plain and simple. All right? What this plan allows me to do is, what if I would have bought right there? I would have broken my plan. Wait to see if we can close above later today. You see what I'm saying? It kept me from adding first thing in the morning. See, this is us buying. We actually bought right there. Okay. If I would have bought here, I would have got screwed. Okay. Now I just sit and I wait. Anything can happen. By the end of the day, BAC could be up here. The end of the day, BAC could be down here, and I could add on the dip. I'm waiting. One of the two has to happen. If this or that, then I got a plan. Right now, nothing to do, folks. Okay? All right, so the next thing that I want to look at is AI. Our AI was up, I think, 200%. And, me being a good captain of this ship, I decided not to take that off. I took most of it off and I left a runner. And now it's only at 41%. All right, and I'm sure you guys might have done good. But I want to come over here and I want to check it out and kind of go over it with you, okay? So AI at the moment has 11 days to go, and we just want to go back and refresh ourselves. Somebody asked about the ACDC today. Are you on here? Was it Jessica? Did you ask? I'm trying to remember. Somebody asked about, yeah. So this is really, really important, folks, and I want you to pay attention to this real quick, okay? My favorite when it comes to, and I have a lot of videos, guys, it's all out there, I promise you. ACDC. The decelerators are red arrows, right? The accelerators are green arrows, right? Just like this. Okay? Just like that on your chart. What I'm looking for, Jessica, and everybody else that might have not seen this before, I'm looking for the chart to be starting in the lower left and moving up like this. Okay? And that one name that you brought up to me was actually doing the opposite. All right? And so up here, we have our target, right? The ME, right? Everybody seeing that? Just like this. Okay? But we had already hit this spot over here previous to that. Okay? We hit it up here. Sorry, that's supposed to be green. So the price of that stock had already hit here. And then it started to move down. So it went through like this. All right? And you're looking at it right here. I want to be looking at it here. And I want to be executing it here. And then I want to exit here. Does that make sense? So we are looking for this right here, Jessica. See how this is working on AI? We are moving up from a demand zone. Okay. We're moving up from a demand zone. We're pulling back into smaller demand zones. They are identified by your trendy bands. Okay. And what we want to see here, check this out. Isn't this cool? So the decelerator held. We want to see a push through the accelerator, and we want to see that target. Do you guys have any questions about that? Does everybody understand that? So once again, I want to see if you want to take an ACDC bull trade, I want you to be looking for names that are doing this, not the opposite. Okay? Not the opposite. However, you guys also have access to the ACDC bear. Boom. This is called ACDC bear. Okay? And you can go through this, Jessica, and anybody else, or people who like to short, and we would be looking at these names. Okay. So for example, Amazon's on here. Let's take a look at Amazon. All right. So do you see what's going on here, everyone? Do you see the difference? So now what happens is the roles are reversed. As long as price stays below the accelerator, we're looking for a move down into these levels. See how that works? Hey, Tim, do you have the, can you hear me, Tim? And I'll be able to answer you. Tim, do you have the new indicator, sir? So if we come up here, not sure. Okay. Well, if you click on your edges, okay, this needs to be turned on right here. Excel, decel, arrows. Okay. For anybody that has the indicators, Excel, decel, you need to make sure it says arrows, Tim. Okay. And then make sure it's on the time frame that you want. That's all. Yeah, no problem. All right. Everybody understand that? So far as this is concerned, this is what we call AC/DC bear setup. All right. Pretty cool, right? However, just because it says AC/DC bear, can somebody tell me? I want to see how much you guys are learning. What would cause you to hesitate going short here? Can anybody see what that might be? Super Dave. I personally do, Steely. Yeah, I personally have it on the 4 hour on my charts. That's right. So over here, the imbalance in the market. Okay, the imbalance in the market, the edge, Strider, exactly. All right. Now I wouldn't call this analysis paralysis because, matter of fact, if you're going short underneath the trendy edge right here, that's a viable trade. All right. And I mean, let's look at it on the PMZ today. Boom. I can't make this stuff up. You go short on the PMZ today. Your risk was only 25 cents. You go short at 129. Price came all the way down to this edge at 127.89 and close enough to 125.72. That's a badass trade for only 25 cents of risk, folks. This is going to teach you to be mechanical, not emotional, because you're going to come over here and go, holy crap, I could have made a lot of money on Amazon today. But I love Amazon, and I love that my wife orders $500 worth of Amazon products every other day, and I just have a hard time shorting it. That's not a good reason not to short it. Just short it because that's the mechanical process, right? So uh, you're going to see a lot of examples that work out really well, but they're not going to necessarily marry up with your attitude or how you feel about something, right? And so we try our best to stay as mechanical as we can. So the AC/DC, Tom, are just levels, you know? There's no price action that prompts it. They're just levels. They're automated levels that are already on your charts if you have the indicators far in advance. Okay? All right. And so again, I can come over here to AC/DC bear and I can set up. So why would I want to come to an AC/DC bear? Well, I would come over here and take a look at this if I feel the market is extended and there's some names out here that look like they want to push to the downside. All right. Remember though, I want to buy things when they're at the bottom. Okay. I know it sounds easy, right? And I want to buy puts when we're pushing up to the top. Look for your demand and supply zones. Closer we get to demand zones, look to buy calls. I'm going to tell you this right now. The majority of people, if you're finding demand zones on a daily or a weekly or a monthly, the majority of people are going to be bearish. They're going to be short-minded. Don't even talk to them. Just ignore them. Don't listen to them. Just follow the process. The idea here is that institutions are smarter than you and I. Okay? The bigger money is not listening to you and I. They're not tuning in to CNBC wondering what the options action channel is doing today. They are the ones that are creating the volume in the market. They are the ones that are creating these big pivots on a higher time frame. So when I look at Amazon and I think about what a beautiful name this is, but let's look at the bigger picture. This is what I see. It came into a demand zone. I've already identified that for you guys many, many times. It was perfect. Matter of fact, this is what we call a double inside and up formation. Boom, boom. There goes the imbalance. The market moves up very quickly to the upside, and they run out of buyers and they come all the way back down to demand. So in November, all right, of 2022, everybody's bearish. Oh, the market's going to die, man, right? I probably said that too once or twice. However, I'm no fool. I still recognize the inside and up formation. And I've seen this over and over and over. And I remember Melissa and I were on the same page. We were looking across the board and we're like, dude, everything's coming into monthly and quarterly demand zones. And look what happened. And I remember some of the things that I did when I went back is that I wanted to see TV, TradingView, right? And I wanted to get an idea really quick on some of these names like Amazon, all right? And I want you to hear what I said, all right? Because I'm not special. No special. None. I'm zero special, all right? This was the chart that I put together a long time ago, all right? And something that I had noticed was when we came back to the inside and up formation, if you just kind of come up here and you look at, okay, the highs and I come down to the lows, I remember specifically saying this. And this is how I talk to myself in case you guys are interested. When everybody else was bearish, I'm thinking to myself, but the price of Amazon is down 56%. And yeah, sure, the world looks crazy. And we know that inflation's high, right? But how many times has the market given you a name like Amazon or Google or any of those names and pull back that much and you're still wanting more? How dare you? That is greedy as can be. So the person that didn't go short here is telling you to go short here. I mean, seriously. You don't want to be that person, right? Do you? Do you really want to be that person, folks? If you want to be bearish, do it up here in supply. If you want to be bullish, do it down here in demand. That is the best way, in my opinion, to approach the market. All right? But you're going to see that the majority of folks actually do the opposite. And you're going to learn that the bigger money, the smarter money, is completely thinking different than you are. But you're going to turn that around. And even if we're wrong, guys, at least we think we're thinking like the big money, right? So, what do we want to do during times like this? Amazon, pullback, monthly chart, inside on the month so far. We have a cloud down here, and we have a trendy edge that's hiding underneath that cloud. Let me go ahead and zoom in and show you. And by the way, folks, this was my plan that I drew months ago. And I can't make this stuff up, man. Okay? We have a trendy edge under there. And if I zoom in, there's a little pink line right there. If for some reason Amazon cannot hold this level, I expect it to come down to here. Slowly, timing is the variable. However, it is actually pulling back to the entry of the supply zone. Okay? And Control Z, sorry about that. 126.21 and is holding support. What was resistance is now support. Also, the next thing that I want you to look at are the days. We're only on the first day down, right? Tomorrow, let's keep our eyes on Amazon. All right, this is like a little pre-game for Amazon. All right. So when price comes down into the edges, we know that one, We found support for now. 2, how do I get into this trade? I wake up in the morning, I look at Amazon. If it's above the PMZ, I go long. Does that make sense, folks? It really doesn't have to be that difficult. Just like, hey, let me show you this. Price moves into the trendy edge. We close under it. So you go to the next day, which is today, and you say, hey, as long as price stays under here, it's bearish. Okay, how do I get into a bearish trade? I go into the 5-minute charts. Okay. And I go short underneath the PMZ, which is going to be this red box right there. Okay. Pretty neat. Now let's go over really quick one more time. Let's go to SPX. I really want you guys to really, I feel like this is one of the coolest things. The 3-minute buy signals are fire, man. They really are. Are the green arrows, I should say. All right. You go to a 3-minute. You could do a 1-minute. Totally up to you. All right. This is a 1-minute. So for example, if I were trying to trade off a 1-minute chart here, all right, I could come over here and my stop's underneath the arrow where I'm comfortable. Okay. And my stop would be roughly around 44.03, 44.02. John, where's the target? Up and to the left. I'm going to use this selling pressure candle right here. And then we have a target that's going to come up over here, just like that. All right. And these are targets. Okay, just like that. Okay. And again, smaller time frame, less risk. Okay. All right. Let's check out some names together really quick. There's so many good names. We'll go out of bear. Let's go over here. Let's see if we actually have any AC/DC bull setups. By the way, your HD is at 63%. Not bad. ENPH. All right. Let's get over here. Go to the 4-hour. You guys can see all the names that are on my chart. There's a ton of them. Look at this AC/DC. Do you see the difference, Jessica? Are you still there? You guys see the difference of the look here? Look at this look. See that? Everybody see that? That's solid. So when we were coming up through the decel, that would have been a great trade to the upside. This right here, accelerator, boom. Your edge is up here at 184, guys, EMPH. That's crazy. All right. I don't know how much does this thing move in a week. Let's go to weekly. Pelletier. Zach, I think you brought Pelletier. Are you the one that brought up Pelletier last week? I apologize, man. It's a super busy week. So we got that. Pelletier. Yeah, nice call on that. Good job, Zach. Jessica, I put my AC/DC on the 4-hour chart, not on a 5-minute chart or anything like that. Yeah, that AC/DC right there, Zach, is money, man. Right? You can see that. Pretty close up here to your target too. You know. So this is not, I would not FOMO into this because it's only 50 cents away. However, if for some reason you get a pullback right here, I'd be looking to go long again right there. Okay. Let's look at some more names. Let's see. Here's AC/DC under the AC/DC. ATHM. Let's take a look here. BA is in there as well. I think Melissa got you guys into some BA. This is a beautiful chart, guys. What is this? This is like medical stuff. Oh, auto home. Never mind. Yeah, totally different, JT. Yeah, these are just stationary, man. How about bros? Hey, bros. There's no dumb questions. Babar, so you can just use the daily range. It's up to you. If you have a big chaotic candle, like a bigger than normal candle, I would just measure that one. But you can just use the range itself. Okay. So this Brothers is a AC/DC as well. This could be fun. 29.93, so like another buck. Give me a second. Let me look at this. And honestly, guys, I don't really think you can approach the AC/DC any way you want. I've always had fun trading it like a lotto, and I hate saying lotto because it's not. It's a setup. It's a setup. It's a trendy setup. What makes it a lotto is how much time you're buying on it. You see what I'm saying? So, for example, on this trade, if I think Brothers can, get up here at 29.93, then that gives me a 30 strike. Those are going for 5 cents by 15 cents. You see what I mean? That's a lotto. It's a 17 delta. The 47 delta, it's a spread of $15, 35 by 50. Um, all I'm saying is if you have the ability to buy equity, you could also do equity and just say, okay, as long as 28.35 holds, I'm going to stay long into 29.93. You know, when I look at it from an equity standpoint, I'm like, yeah, it looks boring. But you never know. Okay, let's see. So not my favorite. Let's look at BA real quick. NG on the AC/DC as it has red candles, but above green arrows. Sure. And by the way, guys, this BA looks amazing. Amazing. Sorry, I'm tired a little bit. Double inside and up. Looking for 216. Let's keep going down here. Ooh, this chart is pretty sexy too. But, again, these are like small names. I'm not big into these kind of names. So this EMPH, I wouldn't expect it to move that much. But you never know. I think I'd rather buy this on a pullback tomorrow if we can. Get down to like 173 EMPH. Ooh, that's a nice break of the daily cloud. That's for sure. Let's see. What are the 180 what does the 180s look like? I have to buy some of this. Next week 375 by 385. That's not bad. It's not bad at all. All right, then you guys say I'm gonna go back to EMPH here in a few. Let's go to NG, natural gas, on the 4 hour. Yeah, so this approach, so we've already hit the edge right here on natural gas. And for me, this trade, for me, Jessica, if I were wanting to trade this, I'd stay in it from a perspective, can it stay above the 4 hour cloud? That's me, you know. So Does that make sense? So, I mean, you kind of pick your battles, right? So you can, depending on your risk, obviously, like look where the decelerator is. Like, do you want to stop down here at 2.4? I don't know. That's up to you. Or do you want to stop, you know, underneath the cloud? I would say the better stop, in my opinion, is 2.5 because there's an edge down here, and I don't want to be too tight on this thing because I'm pretty sure it's volatile. So I want to give it a little bit of room. And then your target's going to be 2.7, 2.8. What does this look like on a larger time frame? Looks great. We're above the cloud on the daily, and then on the weekly, it just looks, you know, boring. So, all right, big move here. So my Roku lottos that are in Ashley's account are 77%. You can watch me sell them right now. I'm actually going to trim at $1 on the 70s. I gave you guys plenty of options to buy Roku and make money. Our equity is up nicely. That's from this morning as well. So great trades today. Yeah, not bad at all. Not bad at all. Yep, sure can. Yep. And I'll be most likely adding into that. I went over it just a few minutes ago, Terry H, so you must have missed it. But okay, so the bigger time frame, what I like is we're going into banks earnings, okay? And BAC doesn't actually report until next week, so they could get clobbered, right? So if Citi does something dumb or who knows, right? So anyways, we're starting a position here, and what I like about it on the daily is that you're inside and up at the moment. Now, please don't get that twisted. It's not a beautiful inside and up formation. It's what we are doing is front running what we feel may be an inside and up formation. Okay. And if we go inside and up, this is my target here at 29.20 by 29.52 and possibly 30. Okay. Understood? And then when we go to the smaller time frame, just to kind of show you what it looks like, is I don't want to do anything unless the end of the day closes above this level, 28.82, and I won't add to the trade unless we get down here at 28.36. Okay. I felt like so I keep getting in and out of Roku JT, and I felt like, hey, why not try to build a position? They have earnings not too far out, but also I trade my wife's account, which I call it the Ash account, and I bought options in there. So when I sent out the alert, you guys get the alert straight from my broker account, but I also gave you options today if you want to take some lottos or if you want to do some credit spreads, those type of things. They were all interesting from that perspective. So, but typically equity, I would trade if the premium I feel is a little too high around the option, you know. But today I did it because I was like, I'm kind of tired of getting in and out of Roku, and the lower yearly edge keeps holding, and because it's holding, I want to stay in the trade, and so I bought equity. And then again in Ash's account, I bought the take a look here. I bought the 70 calls 14 July at 56 cents, and they're trading for 96 cents. Yep, yep. Now another thing I could do, these are really cheap on BAC, is it's just a plan. I could add right here at the trendy edge and then add again right here. But don't want to overdo it, but this is a beautiful inside and up, and so you can see there's a lot of imbalance right here. So if BAC wants to move down here, I'll add into that trade. All right. It's only down 11% though. Uh, it doesn't. It really doesn't at all, man. I use the same technique, man. Seriously. Yeah. The only thing is I'll get a little bit more crazy in there, you know? I shouldn't say crazy. I'll buy a little bit more. hmm Nothing changes though. Yeah. Nothing changed. Same strategy, man. Best strategy in the world, as far as I'm concerned. DKNG. Let's take a look. Yeah, I mean, like, you know, absolutely beautiful. So we got to go to a higher time frame. Beautiful. We reclaim the trendy edge. Yeah. Um, you're asking me right as we're going into some supply here, and that's typical. Most people do, you know. You're what I want you to concentrate on is being the buyer of this zone, and I actually put this zone out a long time ago. So price came right into the zone. It went inside and up. This is where you want to be buying. This is where you should be trimming, in my opinion. And yeah, that's where we want to turn our trading around. What I'll notice is that most people are interested in buying something way out of a demand zone, you know, which is okay. I mean, it could still go to 40, 50, 60, 80. Who knows, right? I don't know. But, you know, this is just a place where I'd be trimming right there, literally. And let's go over here to my favorite. Yeah, arcade. The questions you're asking are really not what we talk about, and just giving you a little bit of insight. So we don't really care if people are trapped or not trapped. What we care about is just trading at the levels. So if I think too much and I try to like, who cares, right? The question is, did it get to our level? Did we execute it? And then we trade it. And that LOW is looking really good today as well. What is HD doing? I mean, I just noticed it just keeps going up. Not bad. And then, man, ENPH. ENPH. What do you want to do, Johnny? Let's try a 172. Maybe like that. Hmm. $185, $195. That seems really expensive. Okay, well, I can see why now. Now, EMPH on, I want to see ENPH, smaller time frame. I think we can, okay. So we could get to 192. If I go a little bit more out of the money. Kind of a weird number, but I'm gonna try to get in there on that. On a butterfly. So let's make sure it reads right. Buy to open, 88 cents. Yep, 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 yep. Yeah, that upstart's looking good too, man. Now this thing pays out pretty good if I hit this. This pays out like 800 bucks for 80 cents. So let's chart this where I want it. So 180. And the reason why I'm doing this now is because I don't want to chase something and pay up a lot of money. It could easily come back to the 172 level tomorrow. So I feel like 80 cents, for this trade is really inexpensive. I would want, let's just go ahead and mark these out. 180. Oh, come on. Oh my goodness. Let's do a 4 hour. Cool. And then 187 and a half. So it looks like this. And then we'll just come in here and we'll change these. And then 187.5. We'll make that red. -2. And let's do +1. Okay. That's 195. That's one. Okay, it looks like that. And that's what the butterfly looks like. This is a AC/DC. Stop. All right, guys, I'm gonna leave those right there. I am probably most likely finished for the day. I'll be in the office and looking at charts. But other than that, I don't think I really need to do much. HD, You guys can approach that any way you want. It's up 60% now. You could get $1.65 for it if you wanted. Yeah, let's see. BAC down 11%. Roku up very nicely, whether you did options or equity. Twilio trying to claw back a little bit. AI 50%. Pins negative 9%. Spotify negative 47%. With time, I'll probably add into Spotify actually before. Let me take a look at it really quick. Overall, good day. Last week was a profitable week as well. Really came back there at the end of the week with Baba and SPX and all that stuff. So that was cool. Spotify, let's see. We're still in that support zone that I gave you guys. And this is a inside and up. Okay, this is what I'm going to do with Spotify. If we can close over right before the end of the day above 158, 70, 65, somewhere in there, I'm going to add. And matter of fact, I can do that without being in front of the charts. So I could just program that real quick. Let's do buy single. And what did we say above 158? Let's just do 158.65. 58 market. So what I'm doing is just programming, sorry, telling the computer what to do here. If I can. 158.65. All right, market. I'm gonna buy two more. If spot is marked at or above 158.60, pretty sure I said 65. Yep. And come down here, hit save, and then confirm spot mark at or above 158.65. Boom, there it is right there. So that will automatically trade if it gets above that level. So for right now, not doing anything. Come back towards the end of the day, see if there's any kind of trade setup. Oil futures down a little bit today, but big move since we called it last week. And we'll come back and, like I said, see if we get something else on the books here today. But overall, good trading, guys. And I'll catch up with you a little bit later.